Morning, everyone. Okay, half past a little bit today this morning. It's on a call that we want to bring up now, discuss the situation. Now, somebody on just now really upset because obviously they took a big smack. I think it was maybe last week sometime on the NVDA, which had the release of the data, which is very good for the company, after the share closed. And then the following day it opened up at 380 odd or whatever it was, $380 a share, way above the 370 stop loss, and obviously therefore had quite a nasty effect, extremely bad effect on the account. And you can't understand why the stop loss was not triggered at 317 and got out at 380, and then obviously a very detrimental aspect on the balance. So I just want to make sure everyone understands what's going on here, because I think a lot of people are trading that, really understand it's a business of buyers and sellers. It's simple as that. And so I think it's spend a moment or two, if you don't mind, before we go any further, explaining a stop loss and the TP. If anyone doesn't understand that, please let's discuss so we all understand it. Right. The stop loss and the take profit are merely buy or sell orders. They can only be triggered if the market is open and there are buyers and sellers willing to take that price on. If there's no buyers and sellers, i.e. the market's closed and it opens up at a much higher price than the stop loss, the only way you'll get out is the market price on opening. I hope you understand what I'm talking about. So, so if you say I've got a stop loss on NVDA at 320, let's say, and the market the following day opens up at 380, the only price you can get out is 380. You might even stop us at 310, 320, 340, 330, it's irrelevant. The price is available for buyers and sellers at 380, not 310. And I think didn't really understand the concept, maybe because Moshe upset because they're not taken, that it's not a stop loss means I automatically get out of that price. No, this is a market of buyers and sellers. And if there's no one buying or selling that price, you won't get out of that price. It's a bit like saying, I don't know, I'm going to sell my house. If it's coming off a bit, I'll sell my house at R1 million. But if a bomb goes off in your area and the house price dropped to $500,000, nobody's going to buy R1 million. They'll be buying $500,000. You've got to accept the stop loss or getting out will be at $500,000 because that's the market will take. If you're not sure what I'm talking about, please say so. Because if I say I'm going to go, let's go to a share, F-stop. If I'm going to buy this, let's put it there, probably 7 here. If I'm going to buy this and I put the stop loss, put a line in here, I want to make sure everyone gets this, because I'm sure everyone's getting this. And my stop loss is there, and the market closes right now, and it opens up tomorrow. Well, not today, by the way. We've got a holiday today, but that being as it may, I'm trying to get this concept across. If the market closes tonight, and you're still in the market, your stop loss is there. If something happens to Ford overnight, something horrible happens to Ford overnight, and it opens up at this figure down here, the only way you're going to get out is at 929 or wherever that figure is. You won't be getting out here because there's no buyers or sellers there. You can only get out on a stop loss on TP if there are buyers and sellers. So when you enter a buy, the stop loss is a sell order. The TP is a sell order. If you're going short, the stop loss is a buy order, the TP is a buy order. Because there's no buyers or sellers, the market's closed, and it opens up a very different price. Well, that's the only price you can get out of that. And again, it applies to, let's say, I don't make it a currency. Let's say the euro dollar is Friday and it closed at 107.29 where it is now, and the stop loss is at 1.07. If something happens over the weekend to the euro and it plummets or something great as the dollar shoots up, and it opens at 1.06, you won't get out of 107, 106. That's what the prices of the buyers and sellers are. And does everybody understand that? I hope everybody understands. I think some of the experienced guys will, but some of the new guys need to understand that. The stop loss and TP are buy and sell orders can only be applicable to a willing buyer or seller to take it off your hands when the market's open at that price. If the market's not open, nothing you can do about it. The market's not open. There's no buyers and sellers. And if it opens at much lower prices, stop loss the following day or the Monday or whatever, that's to negotiate the price where you can get out of it. You can't get out of the original one because that's not the market price. It's like me saying I'm going to go and put my house up for 1 million rand. That's all very well, but there's no buyers at 1 million rand. Nobody's going to take it off me. Hope understand that. And to anybody not understand that, because this person is now obviously extremely upset because it took a major knock. And the other aspect worried me a little bit is because it's financially can't really afford it. Now, you should not, number one, be trading in positions, in volumes, or anything like that in this high-risk speculative market if you can't afford to take the loss. Again, the problem is too many guys are involved in this market who don't understand it. It's like trying to drive a car and you don't really understand how to drive a car. You don't say, right, I want to make a buck. I've got some savings and some pension money. I think I'll jump into that. No, this is high risk, which you need knowledge for in the first place. But even if you didn't, still high risk. Speculative markets, not investment, it's speculatory markets. And you need to have money which you speculate with, you can afford to lose. You don't go to the casino and put your life savings on it. It's far too risky. You put in money at the volume correct size, you're willing to risk. If it doesn't come off, well, so be it. But it mustn't affect your lifestyle. You can't afford it. You can't now pay the rent because you blew your money by not understanding fully, or you took a high risk on the speculative derivative markets. It's not designed for that. It's high risk, high reward, or for hedging purposes. It's not for your pension money. It's not for your rent money. And so two things wrong. She didn't understand that fully. She'd been in the business without understanding it fully, and she was overexposed in an area where she didn't understand, and that's come back and bitten. Just be very careful. Don't drive over the speed limit. You don't know how to drive the car. You don't know what's involved, and etc. I hope that's all clear because I need to bring this up. So I just got off the phone before calling, and I try to get across to the person. It's nothing to do with technicals. There's no buyers and sellers at that price, and that's why your stop loss was not triggered. Does everybody understand what I'm talking about here? Because we need to, if you take the trouble to come to the trade, you need to understand this because it's a worry with the enormous retail market out there trading without, quite frankly, a cooking clue what they're doing. It's to understand the concept or anything involved with it. It's got to be understood. This is a speculative market, and you need to have some understanding of what it's about. It's basic business between buyers and sellers. If there's no buyers, you can sell as much as you like, but there's no buyers. You've got to have a market open and a willing buyer and a willing seller, like all forms, like buying a house or anything, or buying a car. Does anybody not understand that? Because if you can't afford to lose the position, if you're going to a position you can't afford to lose on, and you understand that the stock and TP are purely there if the market's open, then you need to ask to find out, okay? Or Google or find out. Because I felt for the person, I really do. I mean, I'm far from, I'm very sympathetic. But again, trading and working in it is something that she's not fully understanding. And when the explanations come, her emotion upset is overtaking, and of course the information is not taken, she's not getting the information because she's upset. We've got to understand what markets we're in. It's nothing wrong with the Lambo. If you don't understand the dangers of that kind of speed, it's not the Lambo's fault. You're trading something you don't understand. Are we clear on this? It's very, very important. We don't want these sort of upsetting things happen to you guys as well. You know, to understand now. Anybody not understand that TP and SL is purely a buy-sell order, which can only be filled if the market's open. The buyers and sellers are willing to take it off you at that price. Yes, I know it's the only thing you can do, but if absolutely you can do that in Forex as well. You can go into position on Thursday and it comes to Friday and you hold on. Often 90% of the time, it's not a problem, more than 90% of the time. But a bomb could go off over the weekend and your euro dollar stop loss will not be there. It'll obviously get out when the market opens. Like I explained, you work out your business stop loss. I get that completely. You've got to work with the information you've got. But if this is now Friday night and it closes on the euro dollar and it opens and you're going long and it opens up down there, well, so be it. You can't say that's some stop loss because that's irrelevant because there's no buyers that sell that level. It opened up at this level. That's the buyers and sellers are. You might say, I've got enough money, I'm down, but I think we'll cover from now on. But if you don't have enough money, then you'll automatically be margin call, be close to you anyway, because you don't have enough money to maintain that own position after that fall down. This is it, and that was a 25% jump up, and that's on the actual share price. On derivatives, you've got to multiply it by the derivative as well. Remember, if you're on a 10-to-1 leverage, that's 10 times 25. 100-to-1 leverage, 100 times 25. That's contract value. It does worry me how many people worldwide are trading in something they don't know anything about. On a wing and a prayer or something they saw on Instagram, you know? There's another guy WhatsApp me some screenshot, some unbelievable returns. And, you know, obviously got off Instagram somewhere. Can you hear me a bit better now, Tabang? Okay, fine. So I'm just recovering. Actually, I'm coughing, spluttering, but it's ironic enough, it's actually quite good news. Once you start getting coughing and spluttering stage, apparently the theory is the fever's broken. So I'm going to have a bit of a gravelly voice that gets better. It's been lovely another few days, but that's the main thing. But anyway, a lot better now, thank goodness. But most of the weekend popping pills and I should be okay. All right, so anybody there, I'm sorry to go on about it because people are nodding their head, not, you know what I mean, and saying and not replying and not, and then it comes back and hits them and they don't understand why. It's very important to understand why. You understand the stop loss in TP is a buy or sell order, which should only be triggered if the market is open and there's a willing buyer or a willing seller to take the price off you. Because liquidity of these markets are so large internationally, so when the market's open, it's virtually you're going to get out at that price. Not a problem. But if you went in with an extraordinarily high position, if I suddenly went in with, I don't know, a $500 million worth of euro dollar, I might not get out at my stop loss because the position size is too big. There's not enough buyers or sellers to take me out of that position. That's where you get a partial fill. Just remember, it's all business about a willing buyer and a seller. You can have the most wonderful product on the planet, but if nobody's taking it off you, that's the way it is. Okay. Hope you've all got the concept now. We have to use what we got. That's right. We use the position size caliber for stop loss. We work it up right together. But that only applies when the market is open. And if it's not open, you've got to wait till it does open, depending what price it opens at. You might get lucky. It might open above your TP. Then you're smiling. Because you put your TP in here and something wonderful happened to you over the weekend, it opens up there, forget your TP, you'll be getting out there. Happy days, but not happy days the other way around. Well, trading stop is just the same as it's a stop loss. It's just saying automatically modify my stop loss as unless you're going short, as the price comes down, automatically modify your stop loss. But if it closes at 10:30 and you got a trading stop with, I don't know, a share, and it closes, it won't be open today, but let's pretend it is because American holidays, Memorial Day today. But let's pretend it is. And you're still in, and you got a trading stop loss on, let's say, Ford, okay? And then something overnight happens to Ford, it drops through. Forget your trading stop loss. A stop loss is purely a buy or sell order. Remember, trading or manually modified, it's a buy or sell order. It's saying, I'm going to buy you that house off you, Gerard. And the best offer I'm going to give you is 950 or something like that. But if nobody's accepting 950 for the house, then, well, the deal's not going to take place. Are we all clear on this? Oh, I'm sorry to labor it. Are we all clear? Because it's extremely important. because it's the ignorance is coming back and biting people and the frustration that goes with it. Because I feel for you. I mean, I don't, we all make mistakes, but if you're doing it with the best will in the world, just didn't have the knowledge, that's bad. So we've got to try and give you that knowledge. And the problem is too many people are getting that knowledge from people who know maybe a little bit more than you, but not a lot more than you. You don't know that because you know so little anyway. It's like going to the doctor. They can bullshit you because you don't know medicine. You know what I'm saying? And the problem is a lot of guys out there pretending to be sort of financial doctors, but they're not really knowledgeable enough. That's why a lot of people don't code in. Yeah. A lot of guys, I mean, very few people on the old C40, the old top 40 index of South Africa would leave overnight, never mind over a weekend. For those reasons, it can happen. I do, and it hasn't happened enough to me to make it worry me, but occasionally you do have a problem. It happens. I don't know where, why, and what. Don't mean to say just because you had one accident, give up on cars, you know what I mean? Just got to be aware of it. Very much so. That's it. Again, it shouldn't really, because you should have enough funds if you're going to trade properly, and should have your volumes correct. I mean, should, in theory, have a really drastic differential to start to blow your account. So if that blow the account, even a bigger opening or closing, it means normally the person's grossly overexposed. 90% of the time, unfortunately, things go wrong. It's not just bad trading; it's just complete lack of knowledge. They're just not basically getting it. They're too focused on getting a quick buck out of something because they're in some financial problems or dire straits and they want a quick fix somewhere. Their mind is focused on that and understand they've got to not just go and pick up a book on golf and start to be able to play golf. It takes a bit more to it than that. Yeah, well, you can't trade the micro because you either haven't loaded to your watch list. So what you do is you've got to add it to your watch list. You go in there and you add Dow Micro. Now, you can say, well, I've tried that, and it doesn't come up. If it doesn't come up, then you've got to go to the portal. Get rid of this now. You've got to go to the portal and go to open a live account, choosing the Dow and the NAS of the micro options and open that account. Then you'd have to fund it and you'd have to be kept. Nothing to stop you in trading the Dow normal one, but you've got to have enough money to do it. As simple as that. And people asking CFDs without even understanding the product they're in. I mean, you have commodities, you have Forex, you have indices, and you have CFDs. And each instrument, never mind each sector, has different properties, different volatilities, different, well, all the others go around the clock, and the CFDs only open up as 3. It's again trading without even the most basic knowledge. Would you jump into a car and start driving off without really knowing how to change gear? Starts to sound a bit frustrating because it upsets me. She's a nice person. I know the person involved, and she's been very involved with this business, but clearly involved on the sales side without understanding fully the product which she's selling, which I find quite common. Yeah, we can. Yes, we can. We're in it. What's the looking at the Dow index at the moment? It's 104. It's holding above 104 at the moment. It's a bit sideways. We'll see what happens. It's still hovering around. We got the stop at 91, if I remember rightly. I'm not sure I'd be chasing it now. If you're in, I'd hold on. Hope you come right. You got your strategy, let it run, but I'm not sure I'd be joining it now. So just hang on in there. I'm in it as well. And see, I'm down a bit, which feel be better. See, that's my sell. The stop loss is there. Where's the price now? There's about there. I entered there, and that's where the price is now. So I'm slightly down, but let me get run. Okay. I'd leave Peter, I'd leave Engas alone. I'm not in favor of Engas. It was a sell. I'm not too sure about the sell. It went up a little bit actually. Some guys are in the long. It just doesn't seem to be going anywhere. If I had to, I'd probably slightly favour upside. I think it's really overshot at the moment, oversold everything. I think it's got to have some value somewhere, but it doesn't seem to be moving at all. Look at these sideways range going back for about 4 or 5 months now. It's just not going anywhere. Leave it alone, Petro. Don't get involved with anything. You know what I mean? If you're in it already, well, you got your stop loss that protecting you. But if you're not, leave the damn thing alone. Okay, that's fine. Leave it, Petro. Okay, as there's a few new guys there, I think a few new names, etc. As long as we're all on the same page here, it's a learning curve. We're all learning. That's fantastic. Great. That's obviously fine. But just remember, this stuff to be learned. Okay. And ignorance, unfortunately, of the product doesn't blame the product. It's one's own lack of knowledge, but it's can't always blame yourself because there's too many guys out there preaching stuff and they're not too sure of the product themselves. You know, there's guys, you know, teaching without really knowing fully themselves what's going on. If you want to take proper advice, make sure the person is qualified and hopefully you've been in contact with a couple of it, like myself, and you do trust their bona fides. One thing I'm trying to sell here is trust. That's one of the first put man to get it wrong and why get it wrong, etc. Try and sort of work on that basis. There's too many guys promising the world out there, but not really knowing what they're talking about or not really being able to justify it. Just be careful of that. Just not unless you start generally speaking worldwide. I don't know, to be honest. Talk about I don't know now. That's a quick question. I don't know. I'll put a MACD in quickly. All right, indicators, there's an oscillators, got oscillators for MACD. It puts in, there are various ones you can play around, whatever you're comfortable with. I hardly ever use it, so I haven't bothered with it. You can have a fast, EMA is faster than SMA. So you can have a shorter algorithm, a shorter period of time or a longer, depending what sort of strategy you got for the long term. I find, as I said before, they got their uses, but I don't use it much. I use momentum, support resistance, bouncing off the moving day averages of the 50 to 200, just to filter it, etc. See what the buyer and seller are doing, keep not an eye on the fundamentals, as you know well, and watching the price action. I find the MACDs and other indicators tell me usually what's happened to the price action after it's already occurred. Basically, so I can fill these algorithms as much as you like, but the information coming through to the MACD comes from the price action. So if that price action, that green candle is going up, clearly the response of any indicator will be upward. If it's coming off, the response will be downwards. I don't need an indicator to tell me that. I can tell that by keeping an eye on what's happening with fundamentals out there, and quite frankly, looking at the price action of the candle. The candle is telling me what the buyers and sellers are doing. Simple as that. Not whether you agree with it or not. I mean, I might not like a Wimpy very much, but if people are crowding to a Wimpy, then, well, Wimpy's going to do well, whether you like Wimpy or not. Same sort of principle. So if you want to play with them, you can maybe back test a few algorithms, shorter term, medium term, entirely up to you. Always remember, whatever you come up with, that ain't going to tell you what's going to happen. It's told you, it just indicates to you what's already happened. Bear that in mind. Don't try and stop looking for the holy grail of knowing what is going to happen. Once you know that's going to happen, there will be no market. You have to have the buyers and sellers having a different point of view. Otherwise, you don't have a buyer and a seller. Simple as that. If I know that's going to go up, then who the hell is going to sell it to me? If I know it's going to go down, I can't get rid of it because nobody's going to buy it off you if we know it's going to go down. So you've got to have somebody who thinks you're wrong to be able to create that market for buyers and sellers. Simple as that. No more, no less. We're too focused on our what. As soon as we go, and it's quite natural human, I'm wrong there. Quite normal. I went through it myself until I started to understand a bit more. Naturally, if you want to buy this particular thing now, means you buy it, you want to go in that your direction, obviously. But there's millions and millions and millions of people out there with different ideas that pop around. You can't pick a bottom or a top. You might get in there now as a buy, it comes off a bit. You stop out the way, it goes up a bit, and then you think it's doing well and it comes off a bit. It's buy the sellers getting in, getting out all the time. You have to have an overall view, you have the right volumes and be able to afford to take if you get hit and hope the overall views will be correct more times than not. And so far, looking back on the history of the last year or so of trades, they haven't been too bad. They're certainly better than break even. So how come guys screwing up? It's because of undisciplined trading, taking the profit too quickly, not being consistent in their volumes, putting in 500 unit risk on this one, 200 on the euro dollar, and 100 on that stock, and 1,000 on the NAS or whatever. So there's no consistent or discipline involved. Getting out too quickly, modifying stop loss too quickly, not enough gap between the two, misreading the signal, and that sort of thing. It's the interpretation is normally the case. It's not the actual signal. If you just stuck with the signals and kept a decent gap and played with them, you would have been ahead of the game. It's just, unfortunately, as I say, if people don't fully understand, their emotions take control of them, and they become self-absorbed in their own focus without looking at the bigger picture. And that's what comes back in attacks. This is a speculative business for those who want to make a buck. Absolutely can be done. Absolutely it can. I'm still here, and I've done okay. But it's not for widows and orphans. It's not your pension money. It's not your rent or your bond money. That, in fact, to go far as that pension funds are not even allowed to use it except for hedging. The purpose for this, for the pension fund, is for hedging purposes against their their equity positions. Okay, they're not allowed to speculate on it because the risk is too. Just remember that. So a guy comes in and says, the last of my money, I had it, and I got a little bit of savings, and my pension's paid out, and I put it all into this. No. So anyway, go back to Gerard. I don't know what it's in such a thing anyway as a best parameter. It's defaulted there, but quite like it. But many people use it. You can meet someone in Australia, New Zealand, or America, or Timbuktu who swears with MACD, and they'll have different ones. They'll swear by it. It works for them. They're happy with them because it works for them. They'll justify it. Now the guy will say that works for me, and these are the figures you should do. There's no such thing as a correct one. There's no such indicators saying, this is the correct one. These are all, your own personal ways you played around comfortably. I use my strategy, you know it well by now, and that's what I stick to. But there's no holy grail of the 100% strategy. Just remember that. A lot of people spent millions on fantastic computer programs trying to evolve that. No, not as yet. Once it comes, there'll be no market anyway. That's why, and you remember, there's a lot of emotions out of millions of people. It's always going to be an unpredictable area, and sometimes it doesn't make sense. That's normally emotions. A lot of people do things emotion don't always make sense. That happens. So I've gone on about it a bit, but it's very, very important to understand this, because we don't want this rather upsetting scenario I had this morning. This lady, because I happen to know her and I like her very much, and of course she's extremely distraught because she's overexposed in something she didn't really fully understand. Okay, let's have a look at gold. We've got a couple of ideas out this morning. There's wondering whether we jumped in a bit quick or not, but I thought, well, hang on, the 100-day moving average seems to be holding. It's popping around a bit. We've got a 1930 stop loss. I think it's oversold at the moment, so it's going to hover around a little bit. We've got the non-farms, coming up Friday. We will be doing normal 2 o'clock straddle trade session on Friday if you want to join me. And as I say, yeah, it's hovering around a little bit. So if you do agree and you think there could be some upside, well, there you got the trade idea. Work out your volumes correctly to suit your balance, and then you can take it. Okay. Purple and black lines useful. They are moving averages. A moving average is just a smoothed out area of the price action. Simple as that. The best way I would describe, and I use all the time, is called a serrated edge. The ups and downs of the markets, you see that, we call that the noise. It's like a serrated, jagged edge knife. This just smooths out the price action. So I've got on a daily chart at the moment, And that's the average price smoothed out over 10 days, simple, not exponential, simple. This is average price over 50 days, over 100 days, over 200 days. If I go to an hour, that's the average price over 200 hours, 100 hours, 50 hours, 10 hours. You get the idea. If I go to weekly, it's 50 weeks, 100 weeks, 200 weeks, 10 weeks. You get the idea. It's just a moving average, smoothed out, getting rid of the up and down noise. That's the average price. See, it's been average price, been escalating on goals, on the 50 and on the 100 and the 200, and the shorter term has come off, as you can see. Remember, it's only 10 days, it responds a lot quicker than the 200, because it's a longer term, respond to the price action will be slower, because it's a longer period. So if you want to use the moving average, I always put forward that the 200, which is the brown, simple, and all of them are simple. Don't keep repeating myself, okay? So if you're going to use the blue, it's the 50, or the dark blue, the 50 and the 200. They're moving averages, and they're internationally used and therefore self-fulfilling. So I very strongly advise you to have it on your charts. The 100 is also popular, not as popular, but it has its functions, and I'd suggest you have it. And the 10-day, the shorter term, I do quite like it. I suggest you have it. But that is personal choice. You might prefer a 15 or a 20 or 25. Everyone's got their personal choice. But the most popular, most used of by far is this one and this one. So strongly suggest you have them both. If you want all four, put them on there, and then right-click, go to templates and save the template and put your name in there and save it. So you've got them saved coming up. They're used as filters for the buy, sell, or neutral zone, and for support and resistance. Get this here. Sorry, give me a second. So in other words, above the blue, ignore the black and the red. It's above the blue and the brown. It's in the buy zone, strong zone, between the two and the neutral, below the two, the sell zone. And if it comes down to moving average, bounces to the center. If you want to speak, I'll always unmute. Right, where are we now? So if it comes, let's say you want to buy and it comes down here and it bounces, you can buy it there. If you want to sell it, okay, you want to see it go up here, you want to see it comes to here and comes off again, that you're selling the rally, put stop up here, sell it down. If it's between the two, you can buy or sell it. This is another area of support resistance, not as powerful as these two, but still powerful. And that was one of the reasons why I thought it's a good area to buy, because a bit of indecision there. It's come off quite a bit. The 100-day moving average seems to be holding, so that's for ideas. Put the stop down there and take TP up to this sort of level here. That's the idea. So there we got it there. The purple's actually magenta color. So if you like the 10-day magenta, you like the dark blue 50, 100 black, and 200 is the brown. Put it on and then apply to the charts. Just remember it's 200 or 100 times the actual candlestick. So the candlestick's 1 minute. It's not 100 days, it's 100 minutes. It's 100 minutes moving average. Hope that's all clear. Hope you've got all that, Caramello. Good stuff. That's what I want you guys to do. It's a gentleman, that suits a gentleman. Ask these questions so you can clarify. It's frustrating to all of us that people join the trading room, they don't interact, they don't ask, and then 3 weeks later, they still don't know what's going on because they didn't ask. It's very important you interact and not short ask. I'll try and help. And just demonstrate, Gerard, I don't know, I'll say so. I'm not here to BS you. If I don't know, I'll say so. I normally do know, to be honest, that's why I'm here. But if I don't, admit it, and then we can find out together. Okay, I also want to put up for you here is the economic calendar. It's very important. I'm just going to copy and paste it for you. And the dollar index, very important. I'm going to give that to you as well. I post it, and people don't copy and paste it, and then nothing happens, and they wonder why it went right, what went wrong. I mean, I stutter sometimes. It's so blindly, clearly frigging obvious. If you're given the information, you don't use it, well, it's not my problem. So it's frustrating. Yeah, you've got the DX line. You've got to follow this. I put my name up as well. Roger. Trading support. 061 529 3431. Use the WhatsApp. Don't phone me. I get quite dizzy. Use the WhatsApp. Please only contact me if you have a funded, properly funded, not 50 rand your account, wasting my time, never mind yours, account, and not on a demo, you know, and then I can assist you, okay? And I will help. But you've got to come to the party as well. You've got to take action yourself. It's like a lecture at university. They'll put the stuff on the board. You don't take notes. You don't write it down. Don't cry afterwards. You didn't pass it. Don't get your degree. Right, solid, good stuff. Clear. And how about buy? Yeah. Got stopped out on that myself. Yeah. I'm not too sure about that. It surprised me. I went for a short down there, as you know. I thought it was going to hold, and it didn't. It took that out. Will it break above the 100-day? I'll be honest. I'm going to be straightforward, honest on it. I don't know. I'm not sure at all. I cannot make a call on that one. It could come back from there, or it could break through, go further up. They're pretty similar currencies. The technicals were correct in the short earlier on, but obviously that's why it was stop loss. It broke through there. It could easily break through the 100 and go up to 200, or it could hold the 100 and come back off. I'm not confident enough to give it either way. If you feel it's more confident it's going to go up, buy it. If you think it's more confident it's going to go down, enter again and sell it. I'm going to stay on the sidelines on it. I'm not confident either direction at the moment on that. Not strong enough to say it's given me the edge. Now, it's not a 50-50 like putting on red or black in the casino. I need an edge to give me that confidence to go in. I'm not going to get 80, 90. I'll get 60, 65%, sometimes 70% edge in my favor. I'll go for it. At the moment, to me, that's 50-50. I ain't going to go for it. That, of course, is your choice. That's another point. Always remember, you can't blame us. We're here to advise. We do our best. Some of the market does what the market does. In the end, unfortunately, it's your decision. Okay, hope that's all clear. Good stuff. All right. All right, guys. Any other questions? Anything we discussed this morning? Anyone a bit more clarity on? Any trades you want to discuss? Anything on the fundamental front? Remember, the American markets are closed today. So if you're in shares, nothing you can do about it till 3:30 tomorrow afternoon opening. Nothing you can do. You can't modify. I mean, some guys say some very good news came in on, I don't know, Ford stock. Can we take advantage of buying it? No, you can't. There's nothing you can do until the market opens. And the news is already good. It'll be programmed in. So it'll open up anyway. Stop looking for the no-brainer. You might get lucky sometimes, but you're not going to find a no-brainer. Believe you me, if it's that obvious, it would have been seen by other people before, and the price would therefore automatically be discounted to the market price. Just bear that in mind. Well, I don't know. I mean, good question. How's it performing? We know how it's performing. That's obviously getting up. I'm just a bit surprised it's gone up as far as it has. Whether it be maintained is another bloody story. I'm not too sure about that. I think Mark said, I thought it might 14,000, so it might hold. I thought it might get a bit of downside. And Mark said, no. One of our clients said, not in the moment, might be on tomorrow morning. But he says, yeah, I expect some upside. Well, as it turns out, he's quite right. It go further up. I'm just a bit nervous of buying at these levels. I'm not sure it's going to take up 14,500. I don't know. Nobody does. Remember, this is my viewpoint. That's all it is. I don't think it's 16,000 for all I know. Nobody in the world knows. All I'm saying is my viewpoint is I think 14.5 is sort of basically it's going to land up at the maximum, and I think chance a bit of overcooked downside coming in. So I would make my viewpoint. I expect some downside, but that's why I have a stop loss, because I don't know. It could go up. It could go up to 17,000, 18,000. I don't know. It could come back to 110,000. One could go off somewhere. I don't know. Just bear that in mind. It's purely a viewpoint. Who do you think is going to win the next election? What do you think the majority is going to be? I'm sure you've got to highly studied, especially studied political science viewpoint. You don't know until it occurs. It doesn't mean anything, in my opinion, Samuel. Good question. A lot of people say Golden Cross, Devil's Cross. To me, a lot of people make a song about it. To me, it means nothing. It's too lagging. That crossing there on a 50 over 200, that's so lagging today's price action. I think it's fairly meaningless. I don't take a nose of it. There's so much that can happen by the time the moving average, if it's maybe a 3-day crossing, a 5-day or something, maybe you get more quicker response. But a 50 contract here, crossing a 100-day moving average, I mean, that's lagging. It's a longer term moving average. There's a lot can happen. It's a bit like saying, I'll buy gold when it gets to 1930. Well, that might be a good idea now, but let's by the time it gets to 1930, completely different scenario might have occurred, and the situation is not a buy anymore. It's a likely to pull back to 1830 for buy. You get the point. So I wouldn't get too excited about crossings those. In fact, a few years ago, I back tested shorter term moving averages, trying to back test to see when they cross and uncross, to find some sort of a decent trading area where you can, when the 3 crosses 11 or whatever, as a good buy and get out when it crosses back again. Didn't do any good. I back tested a lot and it didn't make it, no. What happens at the moment, the price action depends on the situation at the moment, not what's happened in the past. So yeah, come back to us saying, Sam, I will take a lot of notice of that. Okay. All right. Ken's looking at the US dollar yen. You have to buy it. Do you not think it's a bit overcooked at the moment? It's definitely the buys are, and I totally agree technically. Looks like there's more upside, but do you think the dollar's going to continue its strength? I'm not too sure about that. It's battling to get going above 104 and sustain that. I still think the yen is fairly strong. I'm not sure that I'm the weekly now. I'm still not sure that continuation up to 140, 142 is that likely. It could well be. Technically, you're quite right. Absolutely quite right. Technically, I'm just not so sure that's going to be confirmed. I'm not confident to sell it, but I think it's reaching pretty much highs. I wouldn't be surprised if I get a pullback, but I ain't going to sell it. Oh, sorry. Okay, yeah, I'm mute. Quite right. Okay, go for it.
Yes, mate.
Okay.
Yeah, this is interesting because look at the week before I spoke to, when you were off, I spoke to Clint about USD, JPY. Look at 10 days ago, it shot up from Monday, it shot up Friday, it moved a lot of pips. Now, last week I asked him again, and the same thing, he was not too sure. Look at from last week, Monday, and look at all the movement that the USD JPY is making. See, so I'm saying this because I can see that even this week, I sense a lot of upwards momentum, and because I'm not too sure about what I'm doing, I'm losing out, mate. If you can look at the past 2 weeks, if anybody in the trading room can tell you that every Monday I asked about the USD JPY, and it does move. You see.
Okay, Ken, I must admit, it surprised me the amount of dollar
So
strength.
I'm
I didn't expect the dollar to go right to 104.50. I thought maybe 103 would hold, and then it might hang sideways a bit of action, hang around a bit, wait for the debt ceiling to be lifted, and then either come off a bit or whatever. The dollar went up a little bit more than I expected, and that carried the dollar upwards clearly against the yen. I'm not sure that's going to continue. I'm not confident enough that I would be buying here for a move further up. Let's have a look at the weekly again. Plenty of upside potential to take it right to 150. Will it continue that? Thanks. I'm not sure. I'm not confident enough the dollar is strong enough to drive it that far up, and the yen is weak enough to allow that to occur. My idea is, I think it's peaking at the moment. I'm going to be looking for maybe selling it if I can get some confirmation. But at the moment, I'm not going to do anything. I'm going to leave that alone. I'm not chasing it. This
yes, mate. It does look a bit overbought, but there's a thin line between missing the trade and waiting for the right moment. Because
Absolutely.
if you can have a look, it has taken out all the overhead resistance that were supposed to be the reason for us not buying it. But for some reason, we seem to be a bit late.
Yeah.
But
Well,
I'm in
perhaps,
this anyway because
yeah, perhaps.
I think I'm pull the trigger, mate. Because all the time I'm asking for opinions, 80% of the time I'm damn right, and after the week I'm biting myself for not believing in myself. I think I've passed that stage of a beginner, and I'm an intermediate at the moment. So I don't know. I think I must also offload a lot of work from you by asking all these silly questions.
No, I hear
Whereas
you.
I see the direction. Yeah.
I hear you.
Thanks, mate.
Ken, on the contrary, valuable asset to the trade union. No, yeah. Again, take away the idea, like you keep saying, nobody knows. It's just an opinion, and it's easy to say after the effect. I wish I had had more confidence. It's something called Murphy's law. When you don't do it, you wish you had. When you do it, you wish you hadn't. Sort of, that's called Murphy's law. But yeah, that's your opinion. That's the whole point. It's different opinions. You might have Samuel there, or who else is there? Brady or Brian or something, I don't know, else is there, Farney, Marnie, whatever, say, no, I think this has still got a long way to go. I think 150 is coming. I agree with you, Kevin, you should be buying it now. I'm just voicing my opinion. I think it's a bit overcooked. I'm not going to chase it now. I think it could even pull back a bit. Does that mean I advise selling short? No, I don't. I'm not going to go for it because I'm not confident enough to buy it. I'm not confident enough to sell it either. That's just purely my opinion. And that's the point. It's an opinion. It's not, I'm a Democrat, so I'm right. I'm a Republican, so I'm right. I ANC, and I'm right, and you're DA, you're wrong, or vice versa. No, it's purely an opinion. And I've voiced my opinion, and you have yours. And yeah, good luck if your opinion is right. Simple as that. I'm not surprised you're chicken out like that. That's quite understandable. A lot of us are, because the insane indecision is running out in the international markets out there. There's a lot of funny movements because there's a lot of indecision and unknown flying around. What are the knowns? Massive international debt. What are the knowns? Ukraine war. You are the knowns. We've got a very, very weak president. I don't care if you're Republican or Democrat. The fact is, the guy is not a young 8-year-old. That's the probably polite way of putting it. I'm not knocking him as a person. I'm saying he's not a strongly mentally capacitated 8-year-old in charge. It's a dangerous situation to be in. And he's clearly not up to it, whether you like him or not. He's not up to it. And that's creating a lot of worries. There's a lot of political move to the left, which is all very fine, but it's not necessarily very good for markets in the United States. And they're the big boys out there, which create a lot of indecision and sideways action and nervousness, etc. So, of course, we're all a little bit nervous about it. No doubt what's been going on for a while. What else can I say? Still repeating myself on it. Absolutely. Yeah. A lot of time is 50. A lot of it is really right now, let's be honest, but a lot of it is, crystal ball gazing. But I try to work on my better than 50-50. The 50-50, I try and leave alone. For me at the moment, that's a 50-50. I try and feel that's about a 60%, 65%. I feel in my favor, I'll go for it. And so far, if I take the last 100 trades, it's worked in my favor. Simple as that. Okay. But it is 50-50. I'll give it a miss. And I'm 50-50 on this at the moment. Just try and get away that someone's right and someone's wrong. It's an opinion, and afterwards we know who's right or wrong. Yeah.
Morning all. Ken, I had a look at it, and my feeling is if it closes in the next hour above 145.30, 140.530, I would actually like to try and enter it in the EJS strategy with a 250 points trail stop.
Good point. I forgot about that. Thanks for reminding me. I forgot. EJ, yeah. If there's an EJ, Ken, then I'd support you. I'd support you on the momentum principle, absolutely. But on the normal ones, sending it out to people, etc., excuse me, no, I would go 50-50. But from what Fine just said, I'd agree on that. The momentum strategy, yes, I would. Because that's pure momentum.
And Ken referred to the fact that he looked at the momentum for the last 2 weeks, starting on a Monday every day, and it's just going up. So I support Ken there as well.
Yeah, okay, that's fine. Yeah, absolutely. I thought it was a bit overcooked there, and it came up. I think it's overcooked there, and it continues up. Who knows? It could still go up there. I'm just saying, my personal. I'm not going to chase it now. I'm a bit nervous, but I'm not saying anybody's wrong to do it there. Okay, I hope we're all clear on that. I'm not confident enough to say I'm expecting 152 with a stop down here to get a proper trading strategy going outside, where we can post it on the group and take it from there. I would have a say from the EJ one, yes, I'd be happy on that basis. Once you get a close above the 10-day moving average on the hour, so the 10 1-hour moving average, beg your pardon. Actually, that's good. I'd say Jeff JP.
Yeah, because mate, you taught me something to track the US dollar, and up to so far, I'm tracking it very nicely. I must be honest with myself, you see. So I think also, because last week a lot of people told me they rather sell the USD JPY. You know, I don't know how many people in the trading room, about 6-7 of them saying they rather sell the damn thing. But now look at the thing, it shot up, as I was saying, you see. So we'll take it from there, mate. But
Yeah.
I really appreciate your lessons.
A pleasure, Ken. But I'd say that I wouldn't agree with selling it. We've had enough confirmation. Just because it's gone up so much and I think it's overcooked doesn't mean saying it can't up further. I might have thought it overcooked here. I wouldn't be buying it. No, I didn't say I'm going to sell it. I want confirmation. Just as well I didn't, because look, it went further. And then, oh, no, but it went up. And who knows? All right, went down there, okay. But the point is, I'm certainly not advising selling it, no. But I'm not wanting to join it here for the reason I've given. I want more confirmation. Okay, and I want to keep an eye on the dollar index. If it starts coming off, staying at 104, get a decent move down, and I'll sell it. Anyway, go back to CHF JPY. That was a beaut. There's a classic example where sometimes modify your stop and don't forget to modify your TP. And then, unless you had a big pullback, you might have got stopped out anyway, even the modified stop. Because it went up to C to 155 and 150 at one stage. Came off back to 150, no, sorry, 111, sorry. Yeah, it came off, yeah. Now, if you modified stop, or it might still be, anyway, it all hit the TP, whatever, did very well. Would I be chasing it now? No, I won't. Again, I don't want to sell it. No, I want to buy it, but I want to buy a pullback. I don't want to be chasing it here. And I think it's due for a pullback, a decent profit-taking pullback. Okay, Sam, we've got to go. You got to go. Just looking at some of the other stuff written here. What are the numbers for the moving averages? Of course, no problem. Start at the top, working down. This is the 10, simple, 50, simple, 200, simple, 100, simple. Black 100, brown 200, dark blue 50, magenta 10. I'm not saying 10 day, it's 10 day on here, it'd be 10 hour candle one. Just remember, it's 10, 50, 200, 100 times the candlestick moving average. Interesting point there, Pete. Oh, I think that's some support. Thank you anyway. We just mentioned that, Pete, just now. GBP NZD is a buy, is it too late? To be honest, I think so. Remember, let's the day now. It's gone up 1, 2, 3, 4 days. It went up 670 pips. It's likely to be a bit of profit taking. Always remember that. It might still be strong, the theory might still be weak, but it's humanly natural when you had such a big run to take some off the table. When you're taking some off the table, you're selling to, when you remember selling long, buying exit short. Remember that. So there'll be some guys exiting that position by selling, which will bring the price down. And whether that has got rid of the guys profiting or not, I do not know. I just think, like you said there, but chasing at this level here, is the pound economy, UK, so wonderful, that the pound that wonderfully strong, you'd back it at these levels? I'm not sure I'd agree on that. Okay, I will come to that in a minute, Cody. Okay, so firstly speaking, I will be chasing it here. Let's look at the 4 hour. Sellers that came in, went up, sellers are coming in. 1 hour, sideways, I won't be chasing it now. Look at the price action by look at the shorter term candles. Not enough price action moving it. Not enough action to push it further at this stage.
Yeah, mate, but look at Friday's close is totally above that previous high. You see, it closed above, and I think it's going back to retest that. So
Could well do, could well do. I'm just a bit nervous to chase these levels. Could go here. 120 pips is enough upside to play with.
no.
That's back in February. It could well do that. Yeah, sure, to see a bit clearer. Just not confident enough it's going to be sustained in that direction. And there's a bit of sideways there. I'm not so sure the dollar, it's going to be fairly quiet today. Remember, the American markets are closed. It's going to be, and there's no other, it's completely a trading, not a trending day. There's nothing coming out today at all. Plus, the American markets closed. So I expect some sideways movement. I think too much happening. But I'm not confident enough. There's enough momentum to drive that much higher.
Yeah, but with that, the British markets is also closed as well as the Swiss market.
I didn't know that. I knew about the Swiss. Didn't know about the British one.
Banking holiday.
Ah, yes, see it now. Beg your pardon, you're quite right. Thanks for that. Beg your pardon, you're quite right. So busy concentrating on the Americans, I forgot about the good old Brits. Yeah, I saw the Swiss and I saw the American, and I just went on to something else. Quite bank holiday Monday. Yeah, okay, fair enough. Then. So there we are. Leave the bloody thing alone. It's going to be sideways, very little going on there. The pound and the dollar going forward. Okay.
when you're done with this one, mate, also the USD, the NZD USD, it broke below a very strong support. I think it's going for a sell.
NZD USD.
Yes, mate. Yes, mate.
Yeah, I agree on the sell. I definitely agree on the sell. I'm just not very confident. I just think the
I'm
dollar's due.
looking at it as a weekly sell. I don't know about all the fundamentals, how they're going to go about, especially the Friday's NFP. But Friday is a bit far also.
Just not that confident. Clearly, technically, the weekly it's a sell. On the daily, it's a sell. On the 4 hour, it's a sell. 1 hour, yeah, it's a sell on all of them. So from that point of view, yeah, I'm just not very confident the dollar, but technically speaking, yeah, look at that. Went up a bit, the sellers came in, it's lower than that low here, lower than that low here, yeah. Looks like it's broken through on the daily through this previous support level. So there could be some more downside what we're looking at. There's plenty of meat on the bones to sell it down there. Very likely, could well be. I'm not that confident. I'm going to be honest, I'm not that confident. But yeah, technically speaking, that's a sell. It's backed up by all of them. If it's just purely going momentum, yes, I agree. Okay, Brady, thanks for
See
joining.
how the Friday candle is engulfing a whole lot of candles.
It's also very true. It's got a lovely engulfing candle on Friday, which confirms it, and it's broken through. Technically speaking, I can't even give you one tick against what you're saying. 100% agree with you. I'm just nervous that dollar. I just think it's overcooked. But other than that, yeah. So yeah, we'll have a look at it. don't just be a complete chicken all my life. Where can we put the stop loss? Maybe not, maybe just up here. Maybe about a 65 pip stop. And let's see what we can get for down here somewhere. Yeah, maybe a TP down there. I'll put it up if you want to look at it.
Yes, mate. I'm in already, so I need the correct levels.
Six, 1, 2, 3. Okay, if anyone wants to join Ken on that one, take your speed and get to sell. Totally agree with you.
Yeah, thanks, mate. My stop loss was at 061236, which is not far away
Yeah, that's fine.
from you.
Leave
So
it.
I'm learning, eh?
136 is okay. No problem there. Uh, yeah, I've covered everyone there. Oh, yeah, some of the dollars was fine. Great. It feels like the Americans are pushing a bullish market sentiment at least until around July, saying US dollar short. Yeah, we got a short on some with it anyway. Can't really contradict that. We've got a short out short anyway on the dollar Swiss. So I'm going to let that run. What's the DXY doing? Hovering, not much happening. Just expect a quiet day today, guys. It's going to be very quiet. Swissy close, pound close, and most importantly, the Americans close soon. Don't expect some big price action today. But so anybody want to do this? I'll write it down if you want to do it. I've made my case, but I could well be wrong. If you want to do it with Ken, anyone want to do this one? I'll write down to get a couple of people supporting it. You want to do it? Amanda's going to go for it. He's going to support you. Right. Ken, you got some support. I'll write that down. NZD, USD, and you're going for the sell. 60.59. 61.25. 59.25. And it's $130 a shot. Okay. I'll put down for Ken, see if it comes right. You want to support Ken, there are the figures for you. Okay, Derek. Good. Going to shorten the Dow. It's slightly up, but it's hovering a little bit. Popped up, came off. It's 15 minutes doing. I expect a bit of sideways moving across. That's it. Gold hovering a little bit. It runs. See what it's going to do. It's going to be quite all over. Let's see how it works out. Okay, don't forget, as Dirk says, 2 o'clock Friday. Make sure you're available for the straddle trade on the Dow. We're having that session there. All I ask, guys, is please don't join us if you haven't got any money in your account or your demo, because we're only allowed 100 odd so people in, and you're taking the place of somebody who could actually make use of the trading strategy when you don't have the funds to do it. So if you don't have the funds, not much point in joining, but if you do have the funds, join it. Or put funds in and join it. Okay. Right, GBP CHF, just revisit that from last week. Still seems to be doing okay. I assume you've all modified your stop loss. There should be a few people still in there. If you took profit, then you're probably a bit quick on that. I think you shouldn't have been. You should still be in there. I think if you're out, you maybe sort of put your stop too close or took it too quickly. But you should still be in there, and it seems to be coming to the party nicely. Let it run. It might hit the TP. Anything else? CAD CHF. That's one's been running for a few days. That was at 66.52. It's popped back up to more or less break even now. It's hovering around, probably let it run. Very iffy, these markets all over the place. And the dollar Swiss franc, as you know, we've got a trade out on the moment. And it's trying to come off, so let's hope it comes right. Okay. Still in money, that's good. Try to not take a profit too quickly. Never mind saying it's been in a week or I'm fed up. I don't care if I'm in a month. It's doing well. Why get out of it? What's the point? Why get out of something doing well and to jump into something that might not do well? We used to have a saying in sales: the most important person in the world is the client in front of you, not the potential client you haven't yet seen. You screw up the one in front of you that might have been a good client to rush off into somebody else who in the end lets you down anyway. So yeah, same principle. So yeah, give it a shot, give it a run, and it might do like the CHF. Why? You might even get a situation where you can modify your TP and run it further. Don't get off the winning train, rather get off the losing train. Sounds common sense, but mine's flavorless. It's trying to come off this guy, so maybe it'll start getting a profit soon. CAD CHF is slightly in profit, but it's hovering. And to say the GBP CHF, we should be in profit whatever happens now, because it's clearly modified, not too close, and protected in case something goes wrong. It should be fine on those. AUDNZD, I'm sorry to say that one stopped out at 74. Put it up again. I'm not sure. Some people want to chase it now. I'm not keen. I'm leaving that one. AUDNZD, yeah, that clearly got stopped out at 74. Whether it continues up or down, I'm probably going to guess. In the end, I got stopped out. My WTI had a decent stop, 72, but I got stopped out. I made a profit, reasonable one. I was shooting the lights out job, but I made a profit. At the moment, it's drifting along. I'm not going to chase it again now, so we'll leave oil alone for the moment. Dollar Swiss franc stop loss. I think I've left it where it is. Where's the stop loss? Swiss franc 91. Yeah, I think I'm going to leave it there. I think I've still left it. I think I've modified it. Check. 91. I've left my stop loss there. I'll only start modifying it once I get a bit of a profit going. If it takes up this area here, let's say the 50-day moving average starts coming down here, I'll probably move it there. At the moment, I'm just going to leave it there. So I'm leaving mine at 91. Quite a shock. Tina Turner dying. Yeah, well, shock. She's in her 80s, to be fair, but still, I think most people are a bit taken aback on that. Eh? Definitely one of the greats. Extraordinary, wasn't that? Extraordinary. From a background, how she made it, not just the top, but the ultra top. One of the greatest. Unbelievable. Simply the best, absolutely. I'm thinking people like Barbara Streisand, Betty Midler, greats, but she was definitely up there. Genuine talent, not all marketing like a lot of it is. Like these boy-girl bands, you know, that's all marketing. Teach them how to dance, how to look good. Other people write the songs for them. Choreography's done from them. Not so they put the hard work in, but that's not the natural talent of people like that. Extraordinary woman. Lived in Switzerland, so she'd get left alone. Going to a restaurant without people badgering her. Yeah, okay. So yeah, so it's going to be fairly quiet. So let your trades run. Don't expect too much action today. Have another look tomorrow and keep an eye on things that can get a BHF, JPY, things like that. They might get a pullback. Keep an eye on that dollar. I'm hoping it's going to break through 104. Something's going to occur, and then we can start getting some action on that one. But at the moment, it's going to be, I think, quite a lot sideways. We've got a couple out today. You've got a couple already still in, as Marnie says, like GBP CHF, CAD CHF, dollar Swiss franc. Let them run. Let not get too cute on them. And you guys yourself got that NZD USD here as a sell, so see how they work out for you. Okay, Gerard, good stuff. See you tomorrow. Right, any questions? All got the calculator, precise calculator, all known now know the difference in CFD calculator and the currency calculator, all know that you've got the DXY, like details, you've got the economic calendar, so you've got to know the difference between indices and a currency and a commodity and a share, etc. I hope that's all sort of clarified for a few of you guys. Okay. And you all know now that the stop loss is a buy-sell order that can only be applied when the buyers and sellers at that price. If they're not, it will not be triggered. Thank you very much, Derek. Any questions just for going to the close for today? And you're not sure of anything I've mentioned, you just want a bit of clarity on, that's what we're here for. We'll know the moving averages now, what's involved there, what the different ones now they mean, filtering and all that sort of thing. There's no 1630 class, it's only mornings now. Thank you, Marnie. Thanks for your encouragement. Good stuff. That's great to hear. There's no afternoon class going forward. It might change in the future, but we shall see. But at the moment, it's only morning class. Any other questions? All good? Don't forget, WhatsApp me if you've got $150 or $2.5 grand more in your account. And if you're not on the VIP group, I'll put you on that. Just let me know. You've got my number. Good to hear. Okay, guys, if you're all good, then we'll close up and I'll catch you tomorrow morning. It's going to be fairly quiet again tomorrow on the economic front, but it should start at Wednesday, Thursday with a big one on Friday. Just bear that in mind. Okay. Good. Okay, guys, good stuff. Great to have you. Now we're all clear. Good stuff. Cheers. Cheers, Nat.